Welcome to Consultants and Money, the podcast for solo consultants who want financial clarity without the overwhelm. I'm your host, Erica Goody, CPA, bookkeeping, and CFO partner, and a fellow corporate ship jumper who built a business with balance in mind. Each week we talk about the real money stuff, from keeping your books clean to calming cash flow chaos, saving on taxes, and planning for what's next, so you can focus on your clients and enjoy your life. A quick note, this podcast is for educational and informational purposes only, not financial, accounting, or legal advice. Be sure to talk to a professional who understands your specific situation before making any decisions. Welcome back to the podcast. Today I am joined with Julie Maison. She is a Chief Communications Officer for nonprofits and churches, supporting leaders with communications, coaching, strategy, and fractional communications leadership. She leads the nonprofit comms cohort, equipping early and mid-career communicators to grow their skills and confidence, and consults with organizations nationwide to build strategic, lasting communication strategies and systems that small comms teams can actually maintain. Drawing on almost 2 decades of experience leading communications for national nonprofits, Julie combines strategic expertise with a deep passion for mission-driven work. Julie, welcome to the show.
Hello. Thank you for having me, Erica.
I'm so glad. We are going to do something a little different. We once in a while do this on the show. We're going to have like a little bit of a Q&A. You have some questions for me as a small business owner. I'm going to give you an opportunity to ask those. But before we dive into that, can you tell me a little bit more about your business? Who do you specifically work with, and what are the issues they're facing when they find you?
Yes, that is a great question. So I actually started my business earlier this year after spending more than 16 years working for other people, other nonprofits, all in communications. And I have 3 teenage children. And when you have 2 kids in high school, your life is just super busy. And so I knew I needed to make a pivot. I knew I wanted to keep working. I love working. I've always been a builder. I knew I wanted to stay in the nonprofit world. So I just decided this was the best time to leave, even though it was super risky to leave a chief communications role. You know, I'd finally reached the C-suite. I finally had that job title that I'd been working towards. And then all of a sudden I thought this is not sustainable. So I left to start my own fractional chief communications officer business. And about 7 months in, I'm actually pivoting. I'm still providing fractional CCO leadership for a couple of nonprofits and churches, but I'm actually pivoting now to serving early to mid-career comms professionals. I've really found a niche there. I like to teach. I have found that I'm good at helping people who are newer to the communications world, especially if they're new to nonprofit comms. A lot of people I'm working with, they might have done communications elsewhere. Now they're in the nonprofit world, and the nonprofit world is super different than the secular world. Like, yes, you need to have a lot of the same things. You need messaging calendars, you need to run campaigns, all of that. But the nonprofit world is just different. It's messy, it's sticky. No nonprofit is the same. And so I found that there's a lot of stuff I know how to do because I've been leading comms for so long that I'm able to teach these younger comms professionals who are maybe new to nonprofits or just new to these roles. I'm able to teach them how to have a foundation of good strategic communications. So right now they're coming to me because they feel like they can't be successful. They feel like they don't know how to be strategic. They don't know how to be a strategic partner with their CEO. And they just need help building a foundational communication strategy. So that's what I'm doing. I'm teaching them, I'm coaching, I'm working alongside leaders and loving it.
That's amazing. Okay, I have a follow-up question before you ask me questions. You said you're 7 months in to your own small business.
Yes.
How's it been?
You know, it's been as exciting and fear-inducing as I thought it would be. So I would say I knew I was taking a risk and I knew I was going to have to take it month by month. And so that has been like that level of, oh my gosh, I don't know how this is going to work. That has been true and that's continued. But it's also been really fun because I think a lot of people are like this when they start businesses. You start with this idea, oh my gosh, I'm going to do this. It's going to serve so many people. I can't wait. And then you get in the thick of it and you realize that you're actually turning a corner to go in a different direction, but still kind of in the same vein. And so there's been a lot of fun expected surprises. I would have never thought I would be running an 8-week nonprofit comms cohort this fall with 10 people signed up and paid. Like that was not on my radar when I launched last February. So that's exciting. I love, love, love building new things. And so it's fun to just have new ideas as you interact with different people, whether it's potential clients or current clients, and to go, oh, I could build this thing that would serve that group. So it's been fun. And I feel like I'm getting good momentum. I've got good traction. I'm getting a lot more clarity on where I'm going next. And so that feels really good. That feels less scary than February.
Awesome. That's such a good lesson for the thing we think we're going to build when we start a business is probably not exactly that. And we
Yeah.
probably learn so much in those first few months that we wind up figuring out something, of course, similar to what we were going to do, but you learn something immediately. And maybe you not change directions, but like just course correct slightly because you've learned something new. And that's not wrong. I think so many of us, I'll speak for myself. I want to know what's going to happen in the next year, 2 years. This is why I'm in financial planning, right? This is why I do planning because I want to know what's going to happen.
Right.
And that is good, and that is a skill set, and that's a good thing to want to do. We also have to be okay with if you get down the road and you change is okay. Like it just means you've learned something and
Okay.
you're going in the new, better direction that you've now realized that you couldn't possibly have known 7 months ago.
Well, and I think it's also a lesson of just taking a step forward. Like just do something, move forward, try something. Doesn't work out, try something else.
Did you know when you were in your C-suite role, like, did you know this was the direction you're going to go? Did you know you were going to leave and start something? Or did you have to do some mental work to decide to do that? Or was it like one day you were done?
Probably a little bit of both. What I thought I was going to do was just do some project-based work for a few different clients because I wanted to get out of that grind of having daily meetings, weekly rhythms, all that stuff. I was managing a team, a fairly large team, of both contractors, full-time people, part-time people. And I knew I needed to get away from that responsibility. And that was honestly part of the impetus for leaving too, is being a mom to 3 teenage kids. I didn't have the mental bandwidth at the end of my day for them because and I had managed a great team of people and I worked with great people, but not just at that level of management, it requires a lot of bandwidth. So I knew there was probably a day where I just realized I can't keep doing this, the constant rapport building, relationship building that you need. And I'm good at that and I like doing that, but I just couldn't keep doing it. So I definitely wanted to build something that would allow me to not have so many relationships to manage. So I thought I would do more kind of behind the scenes project-based work. And then my first client actually had me functioning as their fractional CCO. I worked with a small missions organization for about 6 months and it was great. But again, I also found in that I had relationships to maintain, meetings to do. And that's where I've pivoted again. I've said, I don't actually want to be in that rhythm. I can do it. I can do it for a few, just a few clients. But I'd started thinking I'm going to have, 3 to 5 fractional CCO clients. And that is just not realistic for me. Other people not be able to do it, especially if you're working full time. I don't want to work 40 hours a week. I'm trying to work 15 to 20. So that was part of it as well.
I love that. Okay. That's so good. Thank you so much for sharing that. I think that helps listeners who are either in the same position you are in right now, or maybe they're 3 months ahead and they're feeling a pivot pull, or they're still sitting in their corporate role thinking, can I do this?
I'm going to do
So
it.
thank you so much
can.
for sharing that. Well, I meant, can I keep doing what I'm doing now? And they're like,
Oh,
I
yeah.
can. But just hearing somebody else's story just helps us realize that, like, 1, you're not alone, and 2, it's possible, and 3, like, you can think outside the box. That's allowed. It's your life. You can change directions. You can make a decision, even if you're not watching. It's hard to see that in corporate. It's hard to see people. People don't leave corporate generally. So, like, you are the one going against the grain. And it's good to hear other stories that I will call a success story, right? The story you didn't tell was that I quit my job and everything fell apart and my life was over, right? Like you didn't tell that story. You said a journey, and it is a journey you're on. And it's good to know that, yeah, it's a journey. You can take a different road on your journey.
Yes, you sure can. For
Okay,
sure.
so on to money, money, money. You have
Yes.
some questions for me about
Yes.
accounting and money and cash flow, and I'm just going to let you have at it. Let me know what you want to start with.
Yes. So I found you, I'll just say this before I get into my questions. I found you, I think, in March of this year. And I thought, oh my gosh, who is this person speaking about things just like a normal person? And so with all of these questions, I will say, I need you to explain it to me like I'm five. Because, and that's why I think I resonated with you because I mean, I have such a small business and just, especially in the beginning, I just had just actually only had two clients right out of the gate. So it was really like invoicing is easy, all that stuff is easy. But like as it's growing, I'm starting to go, okay, hold up. What does this mean? How do I track this? So the first thing I will ask about, and I have tried to Google this, I have read Reddit forums, I have chat GPT this, which, oh my gosh, that's now a verb, I guess, for saying I chat GPT this. I don't understand accounting or accrual accounting and cash accounting. Like, what is the difference? And like for someone like me who's a single person LLC. Actually, I don't think I'm not even, no, I don't think I know. I'm not a technically an LLC. I'm eventually going to move to an S-Corp, but right now I'm just sole proprietor. So it's just
Okay.
me. What do you recommend for someone like me who has a small handful of clients, has what right now I have one product, I have my cohort, and that's just one fee. I invoice them, they pay. I don't understand accrual accounting or cash accounting. So can you explain it to me like I'm five?
Absolutely. Did you ever major in accounting?
Absolutely not.
I would not expect you to know the difference between cash accounting and accrual accounting. So, whatever you've told yourself, like, I should be able to get this, no, it's fine. You're where you should be. So, at a very high level, cash basis accounting is like when cash hits the bank account, that's when you account for it. And accrual is when, and we'll just say in revenue, when I earned the money, that's when I account for it. So cash basis is pretty self-explanatory. Like if it hits the bank account, that's when it's happening in the accounting. And accrual, it's easier to use, I think, an example. Imagine you're a home builder, like you're actually in construction. And side note, every time somebody tells me they're a homemaker, I go, oh, you're in construction? And they don't think that's funny. Anyways, it's funny. So imagine you're an actual homemaker, a home in construction, and a family hires you to build them a home. And they say, "Here, I'm going to give you $100,000 deposit to build our home, and it's the year 2025. I'm going to pay you that money today as a deposit so that our house can be done in 2026." And you say, "Great, I'm going to start working on that in 2026." But they've given you their deposit to lock in your time and to start buying materials. So as the home builder, you've collected $100,000. And if you're doing accrual accounting, as you probably should as a construction home builder, you should not account for that yet under accrual because you
Okay.
have no house to give them. You have not earned that money yet. They have just sent you money to lock in your time. And you're like, cool, I will build that in 2026 and deliver that house to you in 2026. And at that point, that is when the money should be accounted for as earned.
Okay. So
So
if I'm the home builder and someone pays me in August of 2025, but I'm not going to
yep,
build it until January of 2026, that money should sit in my account. I should not touch it. And I don't even, like in my spreadsheet, I just have a spreadsheet for my expenses. I'm not even going to count it until January, right?
well, you're going to account for it somewhere. It's just not going to be revenue. You're going to get into accrual accounting, which is beyond the scope of like how to do accrual accounting. Like, yes, it will go somewhere. Maybe you need to finish up another project that costs money. Like the cash is yours. How you account for it matters, but it is not considered revenue for that client until 2026. Okay, so that's getting really technical.
Okay.
Here's the rules for the IRS. You don't absolutely have to use accrual accounting unless you're a business earning about $30 million in gross
Okay.
revenue.
I'm good then. Okay.
Yep. So probably I'm going to guess every single last one of us listening to this podcast, you likely don't have to do accrual accounting. Now you can
Okay.
choose to do accrual accounting if you want to, but again, I don't think anybody listening to this podcast based on being a consultant, based on probably the type of revenue you're receiving, accrual accounting probably wouldn't be appropriate for your business. Now,
Okay.
if you're a home builder and you run a $10 million business, like the IRS will not require that of you, but you probably want to do accrual accounting because you don't want to pay taxes for money that actually isn't going to wind up being profit because you have to go build a house the next year. And so, like, there are good reasons to choose to do accrual accounting, but the IRS in general terms doesn't require you to do it until you hit the
Oh.
about $30 million mark.
Okay, so I hear you saying you're recommending me as an independent business owner, independent consultant, I should use cash accounting.
Yes. And I would
Okay,
say that
explain that one
probably,
to me.
yeah, yeah. So no, this is good. So everybody listening, I think this applies probably to the vast majority of people listening. Cash accounting, cash basis accounting is probably what you're doing. It's what I'm doing in my business. It's probably what most people listening. And it is basically like if and like when it hits your bank account. So I assume you have a business checking account where you bill
Yeah.
out of and you maybe have a debit card that you pay expenses out of. Anytime something hits that bank account and cash actually comes in or cash actually leaves, that's the moment you want to account for it in your accounting. Now, something like QuickBooks makes this really easy because it's pulling everything in and it has a date on everything. But if you're doing this on a spreadsheet, it actually becomes very easy on a spreadsheet too. You just pull up your bank statement like you're reconciling a checkbook at the end of the month. And every single time something hits your bank account, that's when you're putting it in your spreadsheet for that month.
Okay, so then let me get real specific here, and hopefully this is helpful. So, for example, I'm looking at my fall and I'm looking at client work that I have, and I'm looking at this nonprofit comms cohort that I mentioned. I'm also going to be launching a church comms cohort where I'm teaching church communicators how to do communications for their church. And that's going to be another cohort, but it's shorter. So for the nonprofit comms cohort, that doesn't start until September 2nd, but I've closed enrollment. So I've been paid for anyone who's going to be in that cohort. That money is in my bank account now. So that all came in August. So I'm going to want to record that income as earned in August. So is that correct?
That is correct.
Okay, so then what I was thinking through is I'm thinking through, okay, I want to pay myself a salary each month. And so I'm looking ahead. So this is where I need you to be like that strategic CFO mind and like, but still explain it to me like I'm five. Because I know you're good at this. I know you're not just a bookkeeper, like you're really good at helping people be strategic with their money. So if I'm looking at money I know is coming in through clients, and then I look at money I've earned in August, is there anything you would recommend in terms of planning that for the rest of my fall? Does that make sense? Like, what
Yeah,
would you
so
recommend?
I'm going to get nitty-gritty on the syntax because I think this matters. You said, I want to pay
Please.
myself a salary. So you're
Yes.
not going to pay yourself a salary because you're
Okay.
not an S-Corp and you're not an employee of your
This is
business.
true.
Yes,
Okay.
you're going to pay yourself an owner's distribution.
Okay.
And that owner's distribution won't show up on your profit and loss statement anywhere because what you're doing is distributing profit to yourself.
Oh.
So, so if you are doing this, and this is like really important accounting, especially if you're DIYing your bookkeeping. Fourth quarter is the perfect time to get your finances in shape. I can help you wrap up the year cleanly and set up a clear cash flow plan for 2026. Getting started is simple. Visit ericagoody.com, fill out the connection form, and we'll book a no pressure free meeting to see if we're a good fit. I'll leave a link in the show notes. If you take $1,000 out of your bank account, that should not show up on your profit and loss statement that you give to your tax preparer. If you do, your taxes are wrong because you're
Oh.
saying my profit is also an expense of my business, which is not true.
Okay, like, this is brand new information to me. This is my feel for me. Okay.
Did ChatGPT not explain this? I'm just kidding.
ChatGPT did not explain it. Okay, so let me give an example. Let's just say I get $1,000 in August. I know I need to set aside 25% for taxes. And maybe I have, let's call $25 of expenses. So we've got $1,000 earned, $25 expenses. So that means I'm going to do 1,000 minus $25, which I'm bad at math. I've always been bad at math. I was told there'd be no math. So 1,000 minus $25 in expenses. What's left?
975. Okay.
Thank you. So I'm going to set aside 25% of that 975, correct?
Mm-hmm.
And then I'm going to pay myself from that. But you're saying you're not paying yourself a salary. I'm taking an owner's distribution. And you're saying
Mm-hmm.
I don't have to be taxed on that?
No. You absolutely have to be
Okay.
taxed on that. That's why you don't want to put it on your profit and loss statement. So what I see a lot of people is they would see $1,000 leave their bank account and then they'd go, okay, I'm going to put $1,000 on my spreadsheet that's eventually going to turn into my profit and loss statement that I give to my tax person. I'm going to say $1,000 owner salary, which is not true. Like, you're not an S-Corp, you're not an employee, you're not paying personal taxes on that. Like, you're taking profit out of a business. So like, you absolutely take the money out, but you want to account for it on the balance sheet, not on the profit and loss statement.
And how would I record it on the balance sheet? It would be an owner's distribution?
Mm-hmm.
Okay. This is when I'm going to sheepishly say, I don't have a profit and loss statement.
Well, you have a spreadsheet.
You have a spreadsheet, yes.
So you have a spreadsheet, and what are you going to do with that spreadsheet when you get to tax time? It sounds like you've only been in business. You haven't gone through a tax season as a new business owner. So what will happen to that spreadsheet when it's tax time?
So I'm going to, there is someone that I know I'm going to use. My husband is also self-employed. He's a counselor and he runs his own business. He's been doing that since COVID. And so I'll probably rely on the services of the accountant that he uses. And I guess I was thinking I would show her my spreadsheet and show her income earned, expenses earned for each month. And that was probably what I was going to do. That's probably not helpful. Tell me what I need to do to help her.
No, that's great. So there's a lot of tax preparers who that is what they get. They get a spreadsheet and then they're making a profit and loss statement from that so that they can then put it into your tax return. Or sometimes there's templates in spreadsheets that will just spit out a profit and loss statement. Or if you're in QuickBooks, you're spitting out the profit and loss statement based on your bookkeeping. And then you're just giving the profit and loss statement to the tax preparer.
Okay. So I'm for sure hearing you say creating a profit and loss statement for myself would be beneficial for me. And then what would you say is the benefit of a profit and loss statement? I remember when I was leading, especially when I was at the C-suite level and the director of comms, I was sitting in on the leadership meeting with the CEO. I always saw our organization's profit and loss statement. I've never once thought about doing one for myself. So talk to me about why that's helpful. Is that on a monthly basis I should be doing that? And how does that help me know what to do moving forward with my business? Because I know it's helpful and I know it's strategic, but help me know what I could do there.
Tactically, you probably want to be looking at that every month because that tells you in totality, as you continue to grow, you're going to have more than just a couple clients and you're going to have revenue streams from these cohorts. And you're going to want to know, what is my year-to-date profit? My year-to-date profit is really important because and you said you want to set aside 25% for taxes. 25% of what? It's of that profit. And so what's really important is, okay, say you're, $10,000 through March in profit. I want to set aside $2,500. Okay, now it's August and I'm up to $50,000 in profit. Well, I need to know that profit number so I know how much to set aside for taxes.
Yeah.
And then I recommend, like, the way I like to think about owner's distribution, and this is just my own framework, is that I like to look in the past and I like to say, on average, you're making this amount of profit per month. And I recommend business owners start off with no more than 50% of their profit as paid out as a distribution.
Okay. No more than 50% of profit paid out as distribution. I'm literally taking notes. So I'm just writing this down. No
and
more
you
than
can
50%.
change that. Obviously, as you get going and things change in your business, you can obviously change that. 25% of setting aside for taxes is also a starting point. If you live in a really high state tax place, or if you have a really high income household, you maybe want to up that. If you have a really low income tax bracket, you could probably reduce that. And so I would just, like, not knowing everybody's situation, not having the insights into their tax returns, I just like to say, 25% for taxes, 50% for profit, 25% to build your reserve.
Okay. So 50-25, that's good. That's easy for me to remember too. What I've been doing with my spreadsheet is trying to set aside 10% savings, 25% taxes. And then I have minimal, everything I do is online, it's virtual. So I have very minimal expenses, a couple of tech stack things, and then, a computer. But okay. That's helpful for me to go, like, right now I'm trying to save 10%. And so if I can work towards 25%, that's a good goal to have. Okay. You definitely explained that to me like I was 5. And I think through that, I realized I'm really more like a 3-year-old when it comes to a lot of this. So,
No, I explained it
um,
to you like you weren't an accounting major, and that's okay.
definitely not an accounting major. Okay. So you talked a lot about the sole proprietorship and all that. What do you recommend? So my initial thought is to move to a sole proprietorship, because I don't know if that's the right word, in 2026. I've been
Do you
trend.
mean an S-Corp?
Yes, sorry. S-Corp. I meant S-Corp. Yes. So right now I'm sole proprietor. So I have run a small business before, is when I was working as a contract worker doing digital marketing. And back then I did start an official LLC. But this time I decided to just remain sole proprietorship. And my husband, who also runs his own business, after about year 2, he switched to an S-Corp. So what I've been told is that usually is a lot more beneficial for tax reasons, but it's usually more beneficial for higher earnings. So my husband had been in business for a while, but I guess my plan was to switch to that next year, even though I'm probably not earning enough for that to be necessary. But I would love to know what you recommend. Should we start as sole proprietors? When should we move to S-Corp? Should we actually be LLCs? I would love your thought there.
Yep. So you can be an LLC and an S-Corp. An LLC is a legal designation, and an S-Corp is a tax designation. So they are 2 different worlds. So if you're a sole proprietor, and I am not a lawyer, there's my disclaimer. I'm not a lawyer. I'm not giving legal advice. This is my understanding. If you're a sole proprietor and somebody sues your company, your personal life is exposed to that lawsuit. If you've set up an LLC for your business and somebody sues your LLC, there are limitations to what they can get to in your personal life. A lawyer might tell you, not that I'm telling anybody this because I'm not a lawyer, you should be an LLC, right? Like if you want the most legal protection and you have to treat that LLC correctly for it to be valid, an LLC keeps your personal life protected.
Okay.
So then once you're an LLC, then from a tax standpoint, you can choose to elect to be an S-Corp, and that can have tax savings. In 2017, and we've talked about this on the podcast, there are some new tax laws. The Tax Cuts and Jobs Act came out with QBI, like all these fun new things that happen that affect how an S-Corp and an LLC might tax you. And so I would always say, having done this for many years and watched people go through years of business ownership, especially in the beginning, my default answer would be wait at least 2 to 3 years to be an S-Corp, unless you can prove it to me, or unless we can prove that together that it makes sense for you. But my default for consultants starting out would be that is likely not enough tax reasons to make an S-Corp make sense in the first or second year.
Okay, so I really should probably, rather than switching to S-Corp in 2026, I should first, in fact, I think I hear you saying you can't become an S-Corp unless you are first an LLC. And so I need to, is that true? No?
I've never seen an S-Corp that was a sole proprietor. I don't know
Okay.
if I'm sure there's an accountant listening to this screaming at their car radio right now, being like, of course not. I don't know. I guess that's a great question. I don't know the answer. I don't know if a sole proprietor can be taxed as an S-Corp. I think not, but I don't know the logistics behind that. But no, I would, if you want legal protection, you would talk to a lawyer, and you would perhaps register as an LLC or whatever is necessary in your state.
So I probably need to move to an LLC first before I do an S-Corp. So
if you're, both for you, Julie, and for anybody listening to this, if you go back to the very first few episodes of this podcast, it's episodes 4 through 7. It's like the order that you would set up your business. You would potentially start with an LLC, get the EIN, get the bank account. And there's a reason we do that in order, because when you're the LLC and you get the EIN, you have to set up the bank account with the EIN, not your social security number. And so there's like a specific order that as you're going down this path for anybody listening to get that set up.
Okay. I just wrote that down. Listen to episodes 4 through 7 of the Erica's podcast. Okay. That's super helpful. Can we talk about cash flow real quick? And I know we kind of talked about this, but I have heard there's someone you actually recommended to me because my husband was looking for a different accountant, and there's someone you recommended and she was wonderful. And my husband ended up going with someone here local, but the person you recommended for me, she talked about cash flow and how one of the things she does when she works with clients is help them think through strategic cash flow. So I know what cash flow means. I don't think I know how to think strategically. Is cash flow something you build a strategic plan for, or is it something you react to? Does that make sense?
Yeah, I absolutely me personally build it. I build it for my clients. And that's where it's kind of the next step after you have your solid bookkeeping, you have your P&Ls on a monthly basis. With my clients, we're sitting down on a monthly basis and literally predicting their P&Ls for every month for the next, 6 to 18 months. And we're planning out what income do you foresee coming in? What do you see in the pipeline? What expenses do you foresee? What are your owner distributions? What are your tax payments based on all of that? And so it's really taking all of that work we've done in the past and then flipping it to look forward into the future so that we can start making really big decisions like, well, if your business is going to grow, your taxes are going to grow. So let's make sure we don't get caught on our heels. Let's make sure we're being proactive on our quarterly estimated tax payments and that you're not over distributing your profit and under distributing your estimated taxes, and that we're also building a reserve. So it's kind of taking these three things and just strategically planning that we're getting you to a reserve in your bank account of at least 3 months of expenses and owner distributions. And we're not overtaxing the business on owner distributions. And then also setting aside enough for taxes, because what your tax preparer told you to set aside for estimated taxes last year is based on last year, unless you've told them otherwise. So if you, especially in that second to third year of business, if you all of a sudden double your profit because you figured it out, your business is taking off, well, then you better expect that you're going to have a huge increase in your taxes as well. And I see a lot of people get caught on their heels and like, oh, well, I did pay the quarterly taxes that my tax person said to pay, but they didn't know your business was going to double. So they didn't tell you numbers that weren't going to keep you from being surprised.
Okay. That makes me think of another question then. What are some mistakes that you see new or just solopreneurs like me? What are some finance or tax mistakes you see people like us make so that I can write those down and not do them? And maybe I've already done one, but I will still.
Well, I don't know. You don't have to admit it here. One of them is over distributing owner distributions of like, I got $1,000 and I paid myself $900 out of it. And those are the situations that will have tax surprises and not the cash to pay those tax surprises in 12 months down the road. And then the other not big, there's one I see frequently is I went on a trip to work on my business and I'm writing it off. And there's a lot of confusion on what the IRS would deem a business expense and what they wouldn't. You work on your business on a trip, I think that's money well spent. If you need to get out of your office and do that, what the IRS thinks is a business expense is a different thing. And we just want to abide in their guidelines for that. I see people trying to write off, not because they're wrong or mean or evil or trying to evade taxes, just because they don't know. Trying to write off a trip that doesn't have an IRS level business purpose as a business expense. Similarly, like I'm doing a speaking gig and I bought this new suit. You can't write off that new suit just because that's an IRS rule. And so things that like to us normal good citizens who aren't trying to evade the tax law. And we're like, well, this is a business expense because I needed to look nice for my very important keynote speech. Like, yes, I agree. That was money well spent. You can't deduct it.
It's just an expense you incurred.
Yeah.
You would put that on your expenses. For me, with my spreadsheet.
You would put that as an owner distribution. You made a personal purchase.
Okay.
For the IRS's purposes.
This is really helpful. I would have definitely put that down as like okay. So I
Because it
can
makes
kind of,
logical sense because it was
yes.
for a business purpose.
Yeah.
And, I've also seen people, I've not had any recent clients that are like this, but like almost took on one client once who like all of his cigarette and liquor store expenses were like on his business credit card. He's like, well, I
Cute.
smoke during work. And I was like, yeah, okay, fair enough. The IRS doesn't agree that that is a business expense.
That would come out of your personal
Yeah.
expense
Yeah,
spreadsheet.
you can absolutely, I mean, you can absolutely use your business money to do that. I would not recommend commingling personal and business. I would distribute that as an owner distribution and then, make all of those personal purchases out of your personal account.
Okay.
Yeah.
So over distribution can cause tax surprises, and writing things off as business expenses that aren't actually business expenses. Those are two mistakes you see people like me make.
Yes. A lot of that is just you don't know the tax code. Like, right? My clients are not tax experts. That's literally why they've come to me. And so like these things I share with them and they're like, I had no idea. I'm like, I wouldn't have expected you to. And I'm,
Yeah.
part of it is just education and not shaming. Like you shouldn't expect to have known this thing that you were never taught or you didn't choose to go read the tax code. That's why you hire professionals to help you like that. Just
Yeah.
like somebody would hire you as a communication professional because they
Yep.
don't know that either.
Mm-hmm. Yeah. Okay.
We're winding towards time. Do you have any
Yes.
last questions that you want to make sure we hit?
No, I think I've taken all the notes. I know this is a podcast, not a video, but I just want Erica to see that I took diligent notes because
Julie is
I'll leave
holding
it.
up a notebook with nicely handwritten notes of all the things. And you can also re-listen to this podcast.
I will. Actually, I was thinking one of the things I was writing down, I thought, okay, I'm going to have to come back to this and listen. And I might listen with my husband since we are now both business owners, which, by the way, that was definitely something when I thought of leaving my nice, solid, sweet C-suite job is, oh my gosh, we're going to figure out retirement benefits and all that stuff. And so as I was Googling, I found a Reddit thread because Reddit is the home of all of the random knowledge. And it said behind every self-employed person is a spouse with full-time benefits. And, we don't have that. So we're both figuring it out. We both definitely have to rely. For me, I'm doing accounting DIY, like you said. My husband has an accountant that he uses. And we definitely have to rely on people to help us where we're not. So like I'm not a skilled accountant. I do not, I can't speak financial language like you can. So this is very helpful.
I will say, as a nod to the entrepreneurs, there are ways to save more for retirement as an entrepreneur than there are to save in a corporate employment situation.
Really?
Yes. So I will link to that episode in the show notes
Okay.
because there are much higher limits on contributions for entrepreneurs, self-employed people than there actually are for corporate employees. And so if that is something you are after, you have the opportunity to do that as a self-employed individual. You just have to strategically plan for it.
Okay. Yes, please do drop that in the show notes because I will look it up. I will also look up episodes 4 through 7 to listen to you talk about the LLC, S-Corp, sole proprietor, all of that stuff. So I feel really grateful. I feel like I just got a very knowledgeable free session on how I can DIY my accounting. So thank you.
Yeah, no problem. If somebody has listened to you and you've maybe said something that perks their ear in a direction that they want to follow up with you, how could they reach you best?
Yeah, so I definitely find me on LinkedIn. That's probably my favorite social media platform these days. But LinkedIn is where you can find me, Julie Maison. And then I also have my website, juliemason.com, JULIEMASSON.com.
Awesome. Julie, thank you so much for being here and for asking your wonderful questions.
Happy to do it. Thank you.
Thanks for joining me today. If you found this episode helpful, share it with a fellow consultant who might need it too. And until next time, here's to cleaner books, calmer cash flow, and more time for what matters most to you.